Hello, and thank you for joining me today. It's Allan Laboucan with the Rocks and Stocks News Show. We've got the third of a four-part segment that I'm doing today. I've been discussing, let me just share the screen here. For the last few couple shows, I've been talking about seasonal trend and poor sentiment for mining stocks that has created tremendous bargains. This is my Substack that you can find at rocksandstocks.substack.com, where I put all of my reports, whether videos or written reports, on Substack. And of course, on my YouTube, you can find under Rocks and Stocks News the shows that I do. And so what I've been talking about is the seasonal trend that we see late in the dog days of summer every year. That's very much like the end of the year after tax loss selling happens. And these trends create a lot of cheap stocks. You get less volume, and the stocks can be pushed around a lot more. And when you have a backdrop like we do of poor sentiment towards mining stocks, this creates a tremendous bargains. And the fact that I'm able to find, I think I talked about 15 companies in the last two shows, 8 and 7 or something like that. And I've got another batch of about 8 to talk about today. And tomorrow I'll be talking about another 8. Is just indicative of the sentiment in the market. And whenever I can find a lot of good stocks trading, good companies trading at such depressed prices, is often a time when we see a significant turnaround. And that's generally what happens after tax loss selling ends in late December. And you go past the new year, you see a pretty good rally in the price of a lot of mining stocks. And then in the summer trend at the end of August, when you go over Labor Day, you often see a similar type thing. And the ultimate driver of these stocks is the price of gold and how people think that will go up or down or sideways. And for a long time now, even though gold has maintained a pretty strong price, the gold stocks and the other metal stocks have been getting beaten down for the last few months. And I think that this trend, these trends are about to switch direction. Last couple of days, we saw gold getting stronger. And today it was up quite nicely. And what caused that was some of the employment numbers and the consumer sentiment came in at a lot more negative than was anticipated. And so the speculation is that the Federal Reserve is going to skip raising interest rates in September. I think ultimately they're at the end of their rope as far as raising interest rates. And this raising of interest rates over the last year has been very bullish for the US dollar. And I think that big trend is about to switch as well. And so I've been really focused on trying to get a bunch of shows in so I can present to my audience a lot of the stories that I think are being underappreciated right now. One of those happens to be Goliath Resources, which is a sponsor of my shows. And Goliath discovers extensive mineralization in multiple outcrops over 500 meters on the Icefields project that remains wide open in the Golden Triangle of British Columbia. They've been having a lot of success down here on their Sherbet area, but they've got this big land package called Icefields that is looking quite promising as well, based on these results. And as you can see, they're showing that they've got the right package of mineralization in the outcrops to make discoveries. Here you've got some nice looking sulfides in the core or in the surface samples that they've taken. They show you the actual outcrops. some more samples, and it looks like they've got another discovery on their hands that could complement the vast discoveries that they've already made in the Sherbet area. As you can see here, this is the Sherbet area, and they've made a bunch of discoveries in this particular area. There's a few faults that go through here. These are the big cracks in the earth, this one here, and these two here, and in that, and all the way over to the other side of the mountain. And the average drill hole intersection there is about 6 meters or 7 meters of around 6 to 7 grams of gold, with very high grades as well. Then on this other side of this fault, you've got the Humdinger. Up here, you've got more targets, and the study that they did at the Colorado School of Mines is suggesting that there's a possibility that all of these zones around Sherbet could be coming from one main mineralizing system. That's a very exciting prospect on its own. The fact of all that they've hit in the extension of that, let's say, main feeder is quite exceptional. I think it puts this project realistically in the 2 to 5 and probably 5 million plus ounce target, and yet they only have about a $70 million valuation. When it all comes down to it, I think that Goliath is going to show that they have the most important discovery in many years in the Golden Triangle. And that's making a pretty bold statement, because the Golden Triangle is quite a prolific district of British Columbia for mining. And it looks like this is a brand new discovery. This isn't a project that has been looked at before. Before there was this was covered by glaciers, and as the glaciers receded, it exposed this mineralization. And the team that they have has done an excellent job of identifying first the Sherbet zone, and then the possible feeder, Golden Gate feeder zone, and all these, they've got just a fabulously list of targets, a very target-rich company, and discovery-rich as well. And I think, again, ultimately, this is going to prove to be the most important new discovery in the Golden Triangle in many, many years. And I just think that with all the drilling that they're doing at Sherbet and their other targets, that the company is going to be releasing a lot of excellent news in the not too distant future from the drilling that they're doing. The reason that I say that with confidence is that they've had 100% success rate with their drilling, and 33% of the holes that they've drilled have come up with visible gold. And recently they announced one of the holes from that, the ones with the visible gold in it, and it returned 23 meters of 21 grams per ton of gold equivalent. Included in that was 33.75 grams per ton of gold equivalent over 14 meters. So, not only are they hitting great things, but in these kind of systems, continuity is king. And this team is showing that this is zones that they are getting a good handle on, and that they are big, and that they have great continuity. And that's ultimately what makes up for something that could be in that multi-million ounce gold category. And I think that's in fact what they have. So stay tuned for more news out of Goliath. Orogen Royalties is a very interesting royalty company to me. They still have a very modest valuation, but I believe that in the royalty business, they might have one of the most attractive royalties of the future that other bigger royalty companies would be interested in owning. And that comes from the Silicon Merlin project that they have in Nevada. This is auctioned out to AngloGold Ashanti, and Orogen holds a 1% net smelter return royalty. The exploration has hit a lot of excellent grades for an orogenic gold, or for a oxide gold system. And AngloGold Ashanti believes that the Merlin deposit is a 6 to 8 million ounce gold target. And then they've also got the Silicon, which is looking like it's 4 to 5 million ounces. So, you know, this is something that this Merlin and Silicon project could quite easily get over a 10 million ounce type target. That would probably be something that that AngloGold Ashanti would be an interest in getting into production very rapidly, because it has handsome grades for an oxide system. And these are the kind of systems that can make a lot of money because they're big tonnage and open pit type projects. And the ultimate argument that I'm making for Orogen is that I believe that they could be a takeover target, or at least some of their assets could be takeover targets for bigger royalty companies. The key one that they have that's cash flowing now is their 2% royalty that they have on the Ermitaño mine that's being operated by First Majestic in Mexico. That's a wonderful cash generating project, very low cost, very high grade, big margins, and Orogen has a 2% royalty on that. And then, as I said, I think one of the most attractive gold royalties out there right now is this project that AngloGold Ashanti is developing at the Silicon Merlin project, that Orogen has a 1% interest. I believe that those two assets could be a takeover target for bigger royalty companies. And then Orogen also has a bunch of other projects with majors and juniors that are in the pipeline to become what they hope is future royalties. So I could see a takeover offer coming for this company for the Ermitaño and the Silicon Merlin project, and then a possible spin out of the remaining assets. I think that this could be a very lucrative thing for the shareholders. And that's why I'm a big fan of Orogen Royalties. They're not a sponsor of my shows, but I've done interviews with their president and CEO, Patty Nicol, and our CEO. And you can find those on my YouTube channel at Rocks and Stocks News at YouTube, or on my Substack at rocksandstocks.substack.com. Alrighty, so now I want to talk about I80 Gold. I80 Gold, I believe, is a multi-billion-dollar company in the making. They currently have about a $700 million valuation. And why I say that with confidence is because of the quality of the projects that they have. One of the projects that will be a future mine is their Cove McCoy project, and it has is a multi-million ounce gold deposit with over 10 grams per ton of gold. Then they've also got their Granite Creek project that looks to also be a multi-million ounce target that they're aggressively working forward with, and just keeps on delivering excellent grades and thick intersections. And it sits beside a 25 million ounce gold project gold mine that is in the same kind of geostructural corridor and in the same kind of rocks. And they've had just multitude of great holes out of that that Granite Creek project. And their flagship project, which is the Ruby Hill project, I believe has more than one world-class deposit on it. It's a very interesting deposit because it has, or a project because it has multiple styles of mineralization. On the east or west side of the pit, the historic pit, there's a Carlin style gold system. To the center of the historical pit is a CRD system. And to the east side of the pit is a skarn system. And to the east of that is a newly discovered sulfide system. And all of these systems are wide open. Of particular interest is the CRD system because they've been finding some of the most, if you look at the in situ value of the metals in the hits that they've had, you're looking at values of $1,000 to over $5,000 per ton of metals that include your CRD minerals, metals like silver, lead, and zinc. But then it also has an overprint of very high grade gold, and those the precious metal or the gold and the CRD mineralization is structurally controlled. And there's this big corridor that goes right off of their property that is wide open to the south. And it's in the right kind of rocks and all of that as well. And so the CRD, the skarn, the sulfide, the Carlin style gold all have the ability to get much larger. And it doesn't really matter which of those you're looking at, they're finding high grade to bonanza grade in all of them. So this Ruby Hill asset, I think, is what's going to be a main driver of them building the company into a multi-billion-dollar company, but and the second largest producer of the future in Nevada, only behind the joint venture with Newmont and Barrick. And it's quite clear that not only do they have the mineable assets, they also have the infrastructure. They've got the ability to process metals at their polymetallic metals at the Ruby Hill facility. They've got the ability to produce oxide material. Then they've also got the ability to process at another facility sulfide material. So they've got all the assets that make me confident that this company is going to grow into a multi-billion-dollar company and is the kind of cornerstone asset that for investors that want exposure to gold mining in Nevada, and that's their total focus is Nevada. And again, I think I80 Gold is a cornerstone holding. I'm very happy to have them on as a sponsor. I've done plenty of interviews with Ewan Downey, who's the CEO of the company. You can find those on my YouTube channel at Rocks and Stocks News, or also on my Substack at rocksandstocks.substack.com. McEwen Mining is not a sponsor of my shows, but this is a company that I think has a very undervalued group of assets that are getting better values, but I think are still quite significantly undervalued. The big driver that sort of sent their stock from around $4 or under $4 Canadian to its current price of $11.23 today is their McEwen copper asset. Now, McEwen Mining owns a 52% interest in McEwen Copper. Rob McEwen himself owns about 14%. Stellantis, which is one of the large automobile. It's basically the former big three that had Chrysler and that group of cars in its portfolio, and then a division of Rio Tinto is also about a 14% owner. So they've got a major mining company as a significant owner in McEwen Mining. They've got a automobile manufacturer that would be an offtake type scenario in Stellantis. They've got Rob McEwen himself, who owns a big position. And then you've got McEwen Mining that owns 52%. And something I did recently is I've been hearing that the possibility is getting much closer that McEwen Copper will be a publicly traded company on its own. So I kind of ran the numbers, and I think quite easily the company could see over $1 billion valuation. The reason I say that is that they have a top 10 of the largest undeveloped copper projects in the world. That also comes in the bottom quartile of costs of producing copper. These are the big assets that the copper mining sector needs. And that's why I believe that the McEwen Copper could see better than a $1 billion valuation. And then if you take that valuation and look at the 52% that McEwen Mining owns, that's about what the valuation that McEwen Mining has right now. And so you're basically getting all their gold mining operations for zero. And they're producing close to 200,000 ounces of gold. They're bringing their costs down. They're improving their grades. They're getting better handle on their production numbers. So I think that, you know, they've got more value to unlock from McEwen Copper, but then you're getting the gold for next to nothing. And I think it's worth a lot more than next to nothing. So McEwen Mining is a special situation that I'm very bullish on, and I think you should check them out. I've done several interviews with Rob McEwen, and I advise you to take a look at those, because not only does he do a great job of explaining the McEwen Mining story, but Rob is also a very successful investor in the mining sector. And he gives you some very good insights into how he thinks about things. And I think that can help you, whether you're looking at McEwen Mining or any company in the mining space. So check those out on my YouTube channel at Rocks and Stocks News, or on my Substack at rocksandstocks.substack.com. Another copper story that I'm quite bullish on is Alta Copper. And Alta Copper has a top 10 project, undeveloped project in the world that is that size in size as well as in grade. So it's got a very handsome grade. It's got a very big deposit. And these are the things that the copper industry needs badly. You know, a lot of the copper production is coming from very old mines that are getting towards the end of their mine lives. And while they are mining out those known old deposits, they're not, the copper mining sector is not replacing those deposits as quickly as they need to, especially when you consider all the copper that's going to be needed for electric vehicles, the move towards alternative energy sources, the need for developed countries to upgrade and update their ancient to very old power grids to meet the needs of these electric automobiles and these alternative energy sources. And then you've got the developed countries that need a lot of copper in order to build out their economies. So no matter how you slice it, I think that it's very likely that we're going to come into a significant copper deficit situation in the next few years. And the industry, the copper mining industry, needs projects like what Alta Copper has. And so, you know, I think they're very underappreciated for the quality of their project. And I do believe strongly that it will be a future mine that will likely be mined by a much larger company that takes them over for that asset. I just believe that it's a matter of time, not if. And so Alta Copper is sponsored my shows. I've done interviews with their management that you can find on my YouTube channel at Rocks and Stocks News or on my Substack at rocksandstocks.substack.com. Okay, so now I'll move over to Generation Mining. And Generation Mining has a very exciting, I'm glad to have recently added them to my sponsorship program, because they've got the Marathon Palladium and Copper project located just off the Trans-Canada Highway in northwestern Ontario. They've done updated feasibility studies. They've got offtake agreements. They're permitting. They're in what is called the latter stages of the development discount window of the Lassonde curve. There are two big waves that you see in the Lassonde curve. One is when a company makes a discovery, and as they're drilling out that discovery, there's a big wave where a lot of money is made. Then they have to do the boring work of analyzing the economics, permitting, drilling out, and doing all that kind of boring work. And they come off and they go into this trough called the development discount window. Now, the next wave is when they bring something into production. So there's two sweet spots in the Lassonde curve. One is prior to a company making a discovery. Second is prior to a company bringing a project into production. We watched this play out quite nicely with Orla Mining. I was banging the table on that at under $2 and almost down to $1. And now it's trading at $6 and looks like it's well on its way as they transitioned into a producer. And so, you know, you can see some very big gains when you buy these companies that are in the latter stages of the development discount window and that sweet spot before they bring it into production. And there isn't enough of those kind of companies out there, and Generation Mining fits into that category perfectly. And they kind of got both sides of the automobile of the future covered. Palladium is needed for internal combustion engines, and copper is needed for electric vehicles. Yes, I believe that electric vehicles are going to become more and more popular, but the idea that you're going to get rid of internal combustion engines is a long time into the future, and you need palladium to clean up the emissions for those kind of vehicles. So I believe that Generation Mining has an excellent future. I believe that they're in the sweet spot before bringing a project into production. I think that they have one that will be a future producer, and it's in a tier 1 jurisdiction in Ontario, Canada, and it's very close to infrastructure, being only, I think it's about 10 to 15 kilometers outside the town of Marathon, just off the Trans-Canada Highway. So it's got a lot of great things going for it. And I think generation mining is a very undervalued story that you want to do your homework on. All right, SilverCrest, not a sponsor of the shows, but a company I'm very bullish on. And why I'm bullish on them is because of their Las Chispas mine in Sonora, Mexico. Now, what makes this a very exciting project is that they're producing gold or silver for around $12 an ounce of silver, and they're selling it for over $20 an ounce. So that makes for a very high margin that generates a lot of free cash flow. And they're only a couple quarters into full commercial production at Las Chispas, and they've been able to pay down all of the funding the debt that they needed to bring the project into production. And while paying down that debt, they've also been building up their cash position. So although the sentiment and in this case, the valuation is very close to its 52-week low, these kind of free cash flow generating mines are not easy to find, and SilverCrest definitely has one. This is going to give them a lot of cash in the bank that will allow them to go out there and look at other potential mines of the future, possibly pay dividends, do stock buybacks. A lot of good things come from this. Now, part of the reason that they are trading at their 52-week lows is this report here, results of an updated independent technical report. Now, since they did their original feasibility study, the costs of everything for all of us, including mining companies, has gone up. So they are producing silver at higher than what was anticipated in their economic assessment prior to production. And so this technical report basically confirms that, yes, they are producing it at a higher cost, and but that's understandable. And in the same breath, I would add that they're making a lot of money when they're producing silver at $12, even though it's higher than what they had assessed in their feasibility study, still making a lot of money. And as the price of silver and gold go up, which I think is going to happen, they'll make even more money. When things get more bullish, the kind of stocks that outperform on the upside are those that are low-cost producers. That's exactly what SilverCrest is, and I'm very bullish on their story. All right, and the final company, that was the final company. So I'm going to go off stop screen share. So there you go. That's the group of companies for today. In this series of shows that I'm doing with talking about seasonal trends and the poor sentiment, creating great bargains that I think are going to change direction in the not too distant future. As always, my shows are for information purposes only. I'm not making any buying or selling recommendations. The show is to help you understand my perspective of these companies, but it's crucial for you to talk to your financial advisors about your risk profile, and also do your homework. I mean to be part of the process of doing homework with my interviews and my commentary on the sector. But ultimately, that your homework should also include going to these companies' websites, checking out their news releases, checking out their corporate presentations. You really want to understand the companies that you're investing in. That applies to the companies that I discuss or any other company you invest in. Being a well-informed investor kind of puts you in a position where you're not making buying or selling recommendations based on emotions caused by the day-to-day fluctuations in the stock, and you tend to make more logical decisions based on the fundamentals of the company. So that's the show. Have a great day, and we'll talk to you soon.